This is For Advisors by Advisors. I'm your host, Evan J. Mayer. And today we have a very special guest in Matt Reiner.
Thanks for having me.
Oh, they're having fun for you. Hey, Matt, how are you?
Good, Evan. That's the first time I've gotten an applause like that before, an ovation in that way. It's usually silence, so I appreciate that.
You know, you should see the audience that's in front of us right now. It's like Arrowhead Stadium, so it's phenomenal. Matt is
I love that.
Matt is the managing partner of Capital Investment Partners. He's also the CEO of Benjamin and a portfolio manager and co-founder of Wela. Is that accurate?
That is right. That's
awesome.
Right.
And he's also a published author, does a bunch of stuff. As any advisor with Ultra ADD does, he's all over the place, and that's awesome. So tell us a little bit. Oh, I believe your dad is Mike. Is Mike dad?
That's right.
Got
it.
So,
that's right.
So tell us a little bit about how Mike got started in the business and kind of where he grew, and then kind of when you joined in and what's transpired since then.
Yeah, it's a phenomenal story. I mean, Dad hasn't really made it on a podcast much, so he's probably honored to be named on this one. But his journey, it was an interesting one, but it started for getting into wealth management. He had done a lot of different things. He's always been an entrepreneur at heart, but it started with 401k management, doing 401ks, helping companies with 401ks, and then it led to people asking him to help on individual wealth management, kind of the traditional story. And so he hung up a shingle, started doing individual wealth management along with 401ks. He created a connection with a local radio host here in Atlanta that then really kind of changed the trajectory of our business. The gentleman had done a radio show here for many years in Atlanta, never was part of a firm, joined up with Dad and his partner at the time. And it kind of just changed the trajectory and the impact that we were able to have. And we've been able to kind of sustain this thing for 26 years now. My brother joined early 2000s. I joined shortly after. Dad still is involved, but now the direction, the strategy of the business is run by myself and brother and one of our other business partners. And it's just been a kind of a natural transition. Dad did a great job of getting us in, giving us opportunity to provide value and have an impact. And he created a culture that's just incredible that we're trying to sustain here today. So that's kind of where we are today.
Did you always know you were going to be in finance? I mean, you went to college, got your degree, and was it right out of college you're joining the RIA?
Yeah, I had some experience just in summer internships with other firms because I wanted to see what it was like outside there. I always tell people I was either going to be a professional baseball player or I was going to be in wealth management. And my professional baseball dreams were shattered pretty early in life when I knew I wasn't good enough. And so then it was just wealth management. That's all I really knew. To be honest, when I was in college, I didn't know there was other professions, and I still am learning about other ones because that's just where I was around. I was always in the office in high school and middle school with Dad, and I just saw what he did. And I said, this is what I should do. And I fell in love with it. So yeah, I would say that.
But always an RIA, or was there any ever affiliation with FINRA and a broker dealer? Or was it always RIA?
No, Dad was one of those pioneers on the RIA side. He was always an RIA from the beginning. And it's so funny to see how the trajectory of what you sell in terms of like how you sell your value prop, like early on, it was like, we're an RIA, and that was a major value prop. Now everybody's an RIA and it's assumed. So yeah, he started from day one as an RIA.
Excellent. And as far as like you joined in what, 2008, 2009, somewhere in there?
2009. Yeah.
2009.
Perfect timing.
AUM wise, where were you guys then and where are you today?
Yeah. So you think about where 2009, I joined right after the bottom. And so it was the lowest level. I think that we were probably around 450, 500 at that time. We had hit, close to $1 billion right before the crash. Now with our team and efforts, we're at about $4.5 billion today.
That's awesome.
So we've been lucky and very fortunate.
Yeah, and you've recruited a lot. It looks like you got a team of what, 50 people, something like that?
Yeah, we're nearing 65 people. We have 5 offices across the country. We have an amazing leadership team, amazing team members that are just serving families the right way in our minds, and we're lucky to have them part of it.
Excellent. Excellent. And when did you start? Obviously, you're running investments for a couple of things, but for your practice, as far as has the money management style changed in recent years where, one time you're doing mutual funds or ETFs and now doing individual positions, or how does that look?
Yeah, our investment philosophy that's something that I'm really proud of, right? As we've grown and evolved, and you look at a lot of like companies as they grow, their identity changes. And our identity has stayed true to the core of who we are. We are a millionaire next door type of firm, right? Our philosophy started with Dad saying we wanted people to swan, sleep well at night. And it's evolved to helping families find happiness in retirement. It's still the same mentality. But the investment thesis and the investment philosophy is all hinged around helping families generate income in retirement via marketable securities. And we've used ETFs for a long time. We've used closed-end funds forever. And we never just were a big mutual fund shop. Or the utilization of individual securities, ETFs, closed-end funds, et cetera, has been core to what we're doing. And we've just continued to refine that in terms of making it easier for our advisors to implement for our clients, making it more robust in terms of our investment team to oversee everything and make the appropriate changes. And so our capabilities have evolved, but our philosophy and thesis and the way that we implement it has not changed. And I think that's something that our clients appreciate. And also it's just good to stay consistent. That builds trust in my mind.
100%. Regarding fixed income, been an interesting year, to say the least. We can finally start doing fixed income to the extent of it's a little easier on the short end of the spectrum. Talk a little bit about what you guys do on the fixed income side of things.
Yeah, so I mean, on the fixed income side, that is kind of our bread and butter, right? We've always said we're boring and we're boring investors, right? We focus on income. Pre 2022, we were doing we had to get dividend paying stocks, right? Value investments. And we still have a lot of value stocks on that side to help get the yield. But with the adjustment in yields and the trending up, we have seen a better opportunity to go into fixed income. And we're doing a lot more bond ladders. We use some of those I-bond ETFs. And we also have found ourselves, I mean, we've always been core in doing what we say alternative income, right? So that includes MLPs, that includes REITs, and we've been using closed-end funds. Now, those are becoming a little bit more expensive and a little bit harder given the increase in rates, but we don't put a ton in those, but we use those as kind of as enhancers to our portfolio. But now with bonds and bond ladders being effective, especially on the short term, we've been using a lot of ladders to help get some juice and yield and also be able to transition a portfolio on the risk spectrum from dividend paying value stocks, which are still or lower risk than growth stocks, but being able to transition those over to some fixed income bond ladders that help to juice up the yield a little bit.
It's nice being able to actually do bond ladders again, right?
Yeah. It was tough for a while.
For sure, for sure. So tell me about Benjamin and Wela. Looked online, from what I gathered, and again, don't hold me to this, but it's all about AI integration and systems. I'm probably completely getting it wrong. So why don't I let you tell us the differences?
Yeah, let's take one of those at a time, right? Let's take Wela first. Our mission and Dad's mission has always been, let's create an environment and a place where clients can get service no matter their age, no matter their demographic, no matter their wealth, and that we can also service them with multiple service offerings across from investments to estate to tax, et cetera. And that's been an ethos that we've been living by forever. And so Wela was kind of the next step in that journey. Was CIA focuses on the millionaire next door, but there's also a lot of people coming in that didn't necessarily have the amount of money that our traditional clients did at CIA. And so we wanted to serve them. And so we created Wela to help us serve the mass affluent. So it really focuses on two separate personas: the Henrys, the high earners not rich yet, so the growers, and then also the retirees that may not have been able to save as much, but still want that access to human financial advice. And so Wela was created to help utilize the infrastructure that we set up at CI from an investment thesis into investment philosophy and research basis to be able to then translate that down to the mass affluent in a scalable and profitable way so that each of those individuals can have a human advisor. And we were able to do that successfully and very proud of that. Now we have
is it kind of like a mixture? Sorry to interrupt you, Matt. Is it kind of like a mixture between like Betterment, like more of one of those type of platforms?
So it's a robo-advisor before a robo-advisor, but it's because we started in 2009, in 2010, but it's always focused on everybody having a human advisor. We've been so a lot of the operations and efficiencies in terms of trading and operational management is all really automated and streamlined. Okay. But we wanted to be able to have our advisors serve more families and still not lose that human touch because we believe in that so much.
Yeah. So basically it's Betterment on steroids, in the concept that if they have questions on estate planning or financial planning, or even an update on the account and performance wise, they can get that from that advisor.
And they have one dedicated advisor that they meet with annually, whether it's a Zoom call, phone call, or in person. And that's the beauty of it. We've created a really robust infrastructure there. We could have changed it if technology was different when we started, but technology wasn't really around to us. So we had to just build it ourselves. And you move over to Benjamin. Benjamin kind of started as a technology platform that was actually inside of Wela Strategies for a while. And it started as a direct-to-consumer platform. And then it evolved to what it is now, which is more of an enterprise software that we provide and sell to wealth managers. And the whole focus of that is the challenge that we face, because there was a problem that we had, an internal problem that we had that we wanted to solve, that we solved. And then there was an external value of other firms wanting it. Basically, it's a workflow automation engine. So robotic process automation is a form of AI that is saying, if this, then do that. And it's taking actions that humans are doing and executing on those. And so we bring together the technologies of an RIA along with their processes to execute on those menial mundane tasks. So the simplest way to think about this is like if you think about online bill pay, right? Before online bill pay, we had to write the check, address the envelope, stamp it, and send it. What online bill pay did was it brought together our bank with our service provider, and it executed on the task of sending the check. It brought those two together to execute. And that's what we're doing. We're that engine that sits in between the technologies and the processes to execute on generating a report, helping with meeting preparation, checking in with the client about their paperwork for their accounts, etc.
A CRM system, though? That's what I was trying to.
Yeah.
It is.
No, it's not. Everybody thinks it is, but we actually live in the background. We don't want to be used. So we integrate deeply with all the CRMs that RIAs use. We want you to continue to use that. Within a CRM, you'd have a workflow, which is great, but there may be 10 steps in a workflow, and every step of those is done by a human. Send the email, generate the report, put this together. Now with Benjamin can pick up those tasks as part of the workflow and go do that work by himself without a human being involved.
Got it. So that software basically handles that stuff in a automatic fashion, I guess.
Exactly. Yes. So it's saving time, creating ROI by delaying hires and elevating people inside of an organization to do more sophisticated work, because our belief is that humans need financial advisors, as we were talking about before we started recording, and you already have very talented people in your organization. They don't need to be doing this menial stuff. They need to be doing and deepening relationships with your clients.
It makes a lot of sense on why you spun that off from Wela, because it's really two completely different entities by all accounts. I mean, maybe it can be used, but at the end of the day, it shouldn't be. When did you start, Benjamin? What is the trajectory of it? And how much of your time is now focused on it?
Yeah. So, I mean, Benjamin is growing, right? 2022 was an amazing year for us. I think that there's been a ton of education around this. Is a new technology that advisors have to put into their stack. We're not comparing mousetraps, right? We're not saying, hey, our reporting system does X, Y, and Z better than ABC reporting system. This is a new technology that people have never interacted with or used in any form or fashion, not just Benjamin. There's been no competitors to realize. And so there's been a ton of education. And 2022 was one of those years where we saw that ramp up of people understanding it, seeing the value, and having the willingness to buy for it. And so it's been a great trajectory on that side to help impact it. And I think that it's just a matter of continuing to educate the market of what we're doing. And in my time, I mean, this was something that we started 8 years ago. That was a natural evolution. Benjamin in its current form is about 3.5, 4 years old. And I spend 80 to 90% of my time there because it's the vision that I have put into it. But we have an amazing team that's really leading the charge, but I still am involved heavily, at least for now, as we continue to evolve and grow the business.
And client-wise, I mean, are you still seeing clients yourself, and how does that work out?
I do. We have an amazing team that helps and services our clients. And a lot of my clients that I have have been with me for 10, 12, 15 years, and they've been around for a while. They understand our methodology and how we do things. And we have an awesome internal team that helps to ensure that they're being served. And it just comes down to time management. Yeah, coming from my dad, who's a natural entrepreneur, I just can't sit still. Yeah. There's an impact that I want to make in this industry that, although CIA and Wela and some of our other businesses will make an amazing impact and serve thousands of families over the time, we can do more. And we may not be able to serve every single family, but we have a mission that we think that every single family in the country should have access and have a human financial advisor. And so we're doing everything we can in every avenue that work to try to meet that mission.
I love that, because you're seeing RIAs and you're seeing firms get Betterment or get these other programs in so that they're retaining assets. But the biggest miss in that is that the human interaction is gone. There's no planner in front of those people. And even though somebody might only have $20,000 to their name, they should have the ability to have somebody that they can speak to. The fact that you guys are, in a lot of ways, grassroots campaigning that and bringing that to scale. We used to have the question when robo-advising started, I don't know, 7 years ago, 8 years ago, as far as it being at least a little bit more mainstream, the conversation was, well, financial advisors are going to become non-meaningful and there won't be financial advisors. And I always said, Clients, when they get to a specific age and a specific asset size, still want somebody to tell them, yeah, that's a good idea, or no, that's a bad idea, and have an advisor that can implement things on a taxation standpoint, an estate planning standpoint, or on a finance standpoint that is to the betterment of the client. And by you guys championing that and starting that, I think that's excellent. So congrats there.
Thanks. And I think that you nail a few points there, really good quality key points that people should realize is that I think that what we missed as an industry and observers is that it wasn't that advisors were going to be replaced. It was just that our job was going to evolve and our role is going to evolve. I think that the natural evolution of being just a stock picker or an investor, that is obsolete in my mind, or it's a commodity. But being a wealth coach and a sounding board and a psychologist and a behavioral psychologist to help people stay away from themselves is key. And the second point is that we have to remember that humans are humans and they have emotions, they have psychological challenges, and all of these robo technologically solutions, which are great, are all built on economic theory. Economic theory is silly. People don't abide by that. And as much as you want to try to prove to them that they can, they are humans. They are not econs, as Richard Thaler says in Misbehaving. They are not econs. They're humans. And I think that when you're dealing with humans, you need another human. And technology may catch up to that, but I just don't see it because there's just a natural connection, relationship that is needed when it comes to something so personal and meaningful as money and retirement and savings.
I couldn't agree more. Specifically, just last year, during 2020, when the pandemic was happening, how many clients in your firm were talked off the ledge from completely destroying their portfolios, and how much value add was there? And modern portfolio theory can work all you want, but when a client starts to see that they think the world is actually going to end, it's a different concept. And so I think what you're bringing to the table is excellent. And truthfully, it can't be a once a year thing. It's got to be an ongoing situation. It's got to be quarterly or semi-annual. There's got to be multiple touches. That's an important factor. So
yeah, people can't make, I mean, I don't want to downgrade us in human intelligence. It's just hard. It's just really hard. Like, I mean, we were talking before the show was recording is that I was just on the CNBC app and I saw 3 articles back to back. One says Jeremy Siegel says stocks are going to have 10 to 15% in 2023. The next article is Ray Dalio says cash for 2023. And then the third, BlackRock's Rich Reader says that it's fixed income and international stocks. It's like, how can a human that doesn't spend all their time in this decide between that? And how do they keep their mental fortitude to say, my plan is right without adjusting to that when you have 3 of the best names in the industry saying 3 different things? It's very difficult to to navigate when you have so much access to information and so much differing information and you don't know who to trust. So you got to find someone you can trust and just believe in that plan.
yeah, I always tell clients CNBC doesn't make money unless people are trading. So people got to be trading. And if people are trading, then that's exactly why. So let's talk about RIAs for a second. Your dad was a pioneer, as you said, one of the first to get down that path. We're seeing major signs that RIAs are picking up steam. One of the things we're seeing is there's a lot of talk out there about independent contractors and W-2 versus 1099. And that's a big thing, right? And if that ends up going anywhere. And then we're also seeing advisors that have been independent or are part of firms starting to consider going RIA. So we're seeing that in mass droves. As far as capital investment partners, that part of the business, and obviously my guess is that's still a very big of a moneymaker for you guys and as a family and as a firm. But at the end of the day, you have advisors there that are looking to attract, and you guys are looking to attract advisors to bring onto the team if it makes sense for you. What's the value add to capital investment partners?
Yeah, I mean, I think that the RIA industry is growing. I think there's a consolidation, there's a desire for it, there's the independency, and I think it's a funny pendulum that's happening, right? Everybody was going from wirehouse to RIAs, and now all these RIAs are going to consolidation, which is just like a new form of wirehouse. And I think you're going to have this kind of, mixed bag. I think for us, it's really simple, right? We have a young management team. We have a growth mindset, and we have access, and we've built out a foundation that provides opportunities for individuals, not only to grow in the role of as an advisor, but to also grow in the role of an impact to the business. And I think that's exciting, right? Growth is is something that is impactful to people. And that is amazing, right? So that's one aspect. But the other aspect is the culture, right? You've got people that talk culture. You got people that say that their culture is better than others. And I'm not saying ours is better than anybody else's. Ours is just unique, right? We have a foundation of this family oriented feel that we're trying to take into other offices across the country. And from the first person that's there to the person that used to babysit me, that was like employee number 5, to now the newest hire, they feel that culture. And as a leadership and management team, that's our biggest challenge, is to ensure that stays as we get to 65 and then 100 and 150 people. And that's what we're focused on. So I think the attractiveness is that it's a growing firm. You can have an impact, and you're getting involved in an amazing culture that's grounded and rooted in something back to our founder.
And you are right. I mean, the business is cultivating into these mass RIAs, specifically with private equity behind them, that are almost creating little wirehouses in the RIA side, where it was never that way prior. And that part does scare me a little bit, that those big firms just keep going and they gobble up people instead of people doing it on their own, because there is an aspect that you need to be entrepreneurial and you have to have a business mindset. But there's also the aspect that it's really not that much more difficult to handle the business operations too.
I think that there's going to be a natural challenge that's going to evolve from this PE money being infused. And I don't know if it's going to be 5 years, 10 years, or 20 years, but it's a benefit because it provides ability to provide more services, scalability, efficiency, right? You have that robustness and still some independence. But there is ultimately, if they get too big, there's going to be then this desire to, I want more freedom. And it'll be interesting to see what this like kind of natural separation of the industry, because you're going to have these advisors that are just these smaller advisors, maybe the sub 500 million. And then you're going to have these like billions, tens, hundreds of billions. And then the middle is really going to be kind of like a no man's zone, because you either are going to be very nichey, or you're going to need the scalability of a large firm to provide more services that clients are looking at, and you won't be able to do it at the cost in the middle. And so it'll be super interesting to see what happens to the middle. But I believe that there's so much still capacity in terms of demand or supply of people that need help, that everybody will be able to find value. You're just going to have to hone in and own who you are if you want to be successful, not try to be someone else. You just got to find who you are, be that person, and be okay with it if you want to stay in the middle or on the lower side.
Private equity, hopping on that. Look, at over $4 billion of assets, you guys are very marketable to these private equity companies. I'm guessing they're coming at you left and right. Have you started to have discussions, or where are you guys around that private equity conversation?
Yeah, I mean, I said it earlier, we're a young firm. We're in terms of leadership, and we are focused on growing this business. We have some major audacious goals over the next 10 years that we're leading, and we're fortunate to be in a really fortunate position, to use fortunate twice. And we have the ability to reach our goals by execution. We have the capital to be able to do it, and we have the longevity to do that. And so we're focused on ourselves right now, and we're focused on our team, ourselves being just our firm. And the private equity market, it can always be enticing, but to be honest, there's nothing that we would rather be doing. So I don't know what it would mean, and we're not really the best people to have bosses, and so we like to just stay on our own.
That makes perfect sense. Is there anything that we didn't cover on this podcast that you think would be beneficial to the advisor world out there?
I think that we covered a good bit. I really do. I am a huge believer of psychology and the needs of us focusing on that. I think that this industry also needs to be really open-minded to evolving and iterating and challenging the status quo. We touched on innovation a little bit with Benjamin, but I would argue to say that this industry has been averse to change for a long time. And I would encourage everybody to have a little bit more of an open mind, to take risks, not necessarily on your investment philosophy and with your clients' money is at stake, but in terms of how you do business, how you market, how you operate, how you create efficiencies, and try new technologies and new ways, and invest time to know your craft and evolve, because there's a lot of new ways to do things. And it's for the betterment of the client, in my opinion, if you do that.
You didn't just promote betterment, though. That was just a phrase or a word you used, right?
Yeah, exactly. Exactly.
Hey, Matt, it was a pleasure to have you. If anybody wants to reach you, what's the best way to get a hold of you?
Yeah, you can check us out. Our company website's yourwealth.com. You can find me on Twitter at Matt Reiner and LinkedIn at Matt Reiner. We do a ton of content just to help with the industry. And you can follow me at mattreiner.com as well, where I put our podcast, Bridging the Gap, and blogs and tweets and all that type of stuff just to help promote the industry. So follow me, connect with me. I'd love to stay in touch.
Matt, you're a huge name in the business. We appreciate your time. We appreciate what you're bringing to the table for the community, and best of luck on everything.
I appreciate you. Thanks so much.
For sure. Advisors out there, hopefully you enjoyed today. Give it a like and subscribe, and we look forward to seeing you on the next one. Thank you.